Welcome back, Trinidad and Tobago. We have such a packed show for you today. Also, we have some trending videos to share with you, but also, every Monday morning we start things off in the world of finance, and Sarodh is standing by. Sarodh, good morning. What's happening? I don't know. We had such an exciting weekend, political developments. Maybe you have some sobering news for us out of finance. Good morning.
Good morning, Hima, and good morning, Trinidad and Tobago, and welcome to the Bourse report. Well, it's actually not that bad in the world of finance. First quarter results results for the month or the period ending March 2020 are coming in fast and furious, and the number of cases are constant. We have that accelerated opening of phase 2 in Trinidad and Tobago, and importantly, crude oil prices are actually back into the 30s, the low to mid 30s, depending on which index you look at. So things are looking up, at least for now. And today we're going to get straight into the Bourse report. And let me see if I could just share my screen here. And today we're talking about the financial performance of two of the banking sector stocks. And we are talking about Republic Financial Holdings Limited and First Citizens Bank Limited for their 6-month periods ended March 31st or March 2020. So let's get straight into Republic first of all. And for that period, they would have reported an earnings per share figure of just around $3.34, which was a 30% or 31% decline from that $4.83 recorded in the prior comparable period. Now, net interest income was up just around 14.3%. Operating expenses, however, did climb around 35%, or from $1.29 billion to $1.75 billion. And there was a very sharp increase in credit loss expenses from $162 million to $382 million, which is reflective of some growing concerns about the fallout that is expected to be associated with COVID-19 across the Caribbean and majorly in Trinidad and Tobago, as we will look at that profit before tax by segment slide shortly. Overall, PBT, or profit before taxes, did decline around 42.5% from $1.46 billion to just around $844 million. Now, importantly, in the first half of 2019 versus 2020, there were some non-recurring items, most importantly a post-retirement medical benefit write-back, which did not occur in the first half of 2020, so therefore that would have accounted for a lot of the sharp drop-off in PBT as well. When we take a look at operating income by segment, we would notice a nice 20% jump there from half year 2020 over 2019, and no significant changes in the composition. Net interest income still accounting for about 65 to 70% of total income, and other income accounting for the remainder, about $945 million or thereabouts. Now, in terms of profit before taxes, there was a stark difference over the periods. And as we can see, for Trinidad and Tobago, that figure in terms of PBT fell from just over $1 billion for the 6 months of the financial year for Republic to $343 million. Again, that was because, or attributable to, one, the absence of that medical expense write-back that occurred in 2019. Firstly, and secondly, that very sharp increase in credit loss expenses as the group prepares for what they may view or maybe prudently are preparing for some increase in loan and a deterioration of loan credit quality. Overall, there was not too much by way of changes. Otherwise, the Eastern Caribbean, with the acquisition of Scotia's EC operations, would have improved from 61 to 126 million. Otherwise, it's much as you were, pretty flat performance across the board in terms of regions that really moved the needle for Republic Financial Holdings. So at a price of $132.50 and a price to earnings ratio of 16 times, the stock is trading above the market average, or the banking sector average rather, of 13.9 times. And with its most recent cut in dividends, and as investors would be aware, the interim dividend was slashed from just around $1.25 to around 60 cents per share. Again, taking a very prudent approach to ensure that the bank has sufficient liquidity and capital available in these particularly uncertain times, which is the dividend yield is now below that banking sector average of 3.7%. So on the basis of relatively high valuations, continuing adverse economic conditions, and we're not really out of the woods as yet, despite things moving in the right direction, and that uncertainty surrounding COVID-19, Bourse has downgraded its rating on Republic Financial Holdings from a buy to a neutral. Turning quickly to First Citizens for the same half-year period ended March 2020, well, the group reported earnings per share figure of $1.60, which is a nice 2.6% or modest 2.6% increase from the $1.56 reported in the prior comparable period for 2019. Interest income was up around 7.9% from $793 million to $856 million. And overall, net income was up just around 4.7% from $1.12 billion to $1.18 billion odd. Operating profits did increase just around 1% from $563 to $569 million. And overall profits after taxes were up also 2.4% from $395 to just around $404 million. So a pretty nice stable performance by First year-on-year or period-on-period rather. No major changes or surprises in terms of what would have contributed to their profit before taxes by segment. Retail and corporate banking grew just about 6% from $471 million in that purple column to $499 million. Otherwise, it was pretty flat. Treasury and investment banking, similar figures of $263 million period on period and $43 million for trustee and asset management over the same period as well. So at its current price of around $43.28, we are maintaining our neutral rating on the basis that its valuations are pretty much in line with the banking sector. This is trading at a 14.3 times multiple compared to the banking sector's average again of 13.9 times and a dividend yield of 3.7%, which is smack in line with dividends or the dividend yield of the banking sector, excluding special dividends. So that's it for this week's report. For more information on these and other investment themes, you can give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com or check out our website where this research access or this research report is free and totally free and accessible by all investors at bourseinvestment.com. That's it. Back to you, Hima, and have yourselves a great investing week. This has been the Bourse Report.